Hey, and welcome back. Sorry about the lighting. I know my lighting sucks on all of it, but it's nighttime, so I know it's even worse. But I had this video that I wanted to upload and give you guys. It's a sneak peek of one of the Saturday sessions I have. I hold a Saturday session every single Saturday, 10 a.m. to part of my trading community. And this is just a snippet of some of the things we talk about. So today I was going over the differences between flags and channels. I hope you guys enjoy. Please make sure you like, subscribe, and share, and leave a comment in the description box below or wherever you want to leave the comment. I'd love to speak with you. And if you want to be a part of my trading community, please reach out to me. My email address will be in the bottom. It's thetradeMasters.im@gmail.com. Let's go. We're going to do flag patterns compared to channels real quick. I need some drawing paper. I want to review flag patterns because we need to compare it to channels so that people will understand the difference between the two. Okay? When we are looking at flag patterns, it is telling us that price is going to continue, that price wants to continue. I'll put it like that. When we're looking at flag patterns in an uptrend, we have these type of flag patterns. And as long as price in that uptrend, as long as 2 is higher than 1, we know that price is going to continue up, or we can anticipate that price is going to continue up. It is a continuation pattern. So we don't continue if we don't see a continuation pattern. Very simple, right? Any questions? Okay. The same is true for a downtrend. If price is going down, we need a continuation pattern. And as long as that bottom, boom, is lower than the top, it does not exceed, it didn't come all the way up here, then we can anticipate that price is going to sail down. These are continuation patterns. These, on the other hand, are reversal patterns. They're called channels. So a channel, an ascending channel, looks like this. Let me go back. This is a bullish flag. Ooh, I look like I'm writing in the 3rd grade. Ooh, this is not easy to do with my finger. This is a bullish flag. This is a bearish flag. And if you want to take screenshots of this, be my guest. I should probably just type on here, right? All right. Again, these are continuation patterns. These are reversal patterns. Your market will go up and like Superman and up. It will make like a little snooty F, like a little stuck up F. This is an indication to me that price is going to reverse. This is called an ascending channel. AC. This is called a descending channel. Price is going to go down and then slant down like a hockey stick. And when price does that, it's an indication that price is going to reverse and go up. Now, here's the difference when you're looking at your MACD. For weeks and weeks and weeks, we always talk about the convergence part of your MACD. When price is in convergence with your MACD, if price is going up, your MACD is going up. If price is going down, your MACD is going down. Now, this is different because when you have an ascending channel, your MACD is going to go opposite to tell you, hey, pay attention. Hey, the market is only going to be going up for so long, but it's going to reverse. This pattern is telling you, hey, it's tapping you on your shoulder. Hey, pay attention. Even though the market is going down, look and gear up for a reversal, and your MACD will go the opposite. I have a cheat sheet in my notebook. If you don't have a notebook, if you're not accumulating information and putting these things in your notebook, I implore you to get a notebook and put it in here. Let me go. I think, where is it? I have a cheat sheet. Where's my cheat sheet?
Sharon, you know, we look at your notebook and it's intimidating. Mine would be like horrible.
See, here's the beautiful thing. Your notebook is how you need it to be. It's however you need that thing. All right, so here is a divergence cheat sheet. If the market is going up and your MACD is going down, you need to start just looking at the market. Now, here is the kicker. With a flag, I can tell my entry. When the pullback is over, flag pattern is over, I can enter. With divergence, you're just waiting on this. You're waiting on the market to come up, but it's going to give you a flag pattern coming out. So now you know to continue down. Does that make sense? I'll do it again because it felt like that went by real fast. If I have an ascending channel, boom and boom, and your ascending channels, like we've been waiting for US 30 to drop for I don't know how long. Your channel can go on, look like forever. There have been channels that have been going on for years, months, weeks. I know overall I'm looking for this, but in order for me to do this, I need this, right? I need that. So what I'm waiting on is for the market to drop out. Give me that. Drop out, give me a continuation pattern, then I can continue down. Because what the market makers will do, they know we're sitting here waiting. They'll do stuff like this. We've got this ascending channel. Let it drop out. They're going to start selling and then bring the thing right back up into that channel. We always wait on a pattern. No matter what pattern you're looking at, I don't care if it's a double top, a double bottom, I don't care what it is. It's going to be a culmination of flag patterns that make those patterns. It's going to be a flag pattern. If you're looking at a descending channel, boom to boom. I'm wrong one. I did a flag. If you're looking at a descending channel and we're anticipating, we said that that's a reversal pattern. Price is going down and down. We're waiting for it to go up. I think it's going to go up. Then I need to see this. I need it to come out of there. Give me a bullish flag. Then I know I'm good. I can start buying now. That was a real ugly little point on there. Boom. Do we know the difference between a flag pattern and an ascending channel? Or a channel, should I say. A flag pattern versus a channel. Yes or no? Because you all know next I'm getting ready to go to a real, real chart. So we can see.
No, what is a channel?
Huh?
Go ahead. Give me what's a channel again?
A channel is a reversal pattern. Remember, flags are continuation. Channels are reversals.
Okay, got
They
it.
tell us that the market is going down and then it dips sideways going down. That's an indicator that price wants to reverse. But I don't reverse it until I see a pattern. So I've got to have a flag pattern coming after a channel is over. So let's go and see if we can find some in the market. I cannot make any guarantees. Let's go back here. Let me take everything off of there. market went up and up and came down, gave me a flag, and now I'm selling. See if I can find a descending
So in between there was your channel?
Sir?
In between there where you drew those two lines, was that your channel?
This is my channel. That was my ascending channel. It went up.
Right. Okay.
The market went up, slanted up. Right. I didn't move until I saw a pattern to tell me to move. That's what I need to see, because we just established that that is a continuation pattern. Now I can sell on 3. I need a 1-2. I always need a 1-2 before I do a 3. Questions, comments, criticisms?